Time for another stock review, this time SoFi. Now, we've done this one in the past, so this is going to be interesting to see how my opinions, if at all, have changed from my previous review. In this review, we are going to take a look at SoFi to see if you can make money, see if it's going to go up or down. We've got lots to talk about. We're going to cover the news. We're going to go over the numbers. So let's, without further ado, get straight into it. In this review, we're going to look to see how you can trade the stock. There's the information there. We're going to look at the intrinsic value. We're going to look at the balance sheet, the profit, the loss, the solvency, who's buying on the inside. We're going to go and have a look at the website if you're not familiar with the company. SoFi, we're going to take a look at some latest news. We've got student loan forgiveness. What's going on with SoFi? A lot of people are asking what is going on. What is going on is very, very clear to me. We're going to compare to a back test to the S&P 500. All of that's coming up in this review. Bearing in mind, as always, I only own the S&P. I'm completely impartial. No one pays me from the companies to make these reviews. I do them for free. I could get paid to do them in all kinds of ways, but I don't. I do them for my members. If you're a member of my channel, you can have a review just like this. So let's get straight into it without further ado. Also, this will accompany the Meet the CEO series. We'd love to have the CEO on the show. That would be an interesting one, as my last review was very critical. But let's see what we can do with SoFi today. All right, so for those of you who are unfamiliar, we'll start at the beginning. Please tap the like button if you like reviews and stock reviews, and also a bit of entertainment as well. We like to have fun with it. If you have fun making money, you always make money. You just stay at the right frame of mind. Click subscribe and ring the bell. We go live 12 hours a day and provide you with the best, most honest live service. This video is being made during a live show, so there's no editing. It is as it is. I'm reading it for the first time. I don't go back and jiggle it about. I just do it as I find it. Okay, let's start from the very beginning. What is SoFi? Let's have a look at it. It's a fintech. It's finance tech. And NASDAQ and tech is all down now because we're going through a rotation. But that's not really the story for this stock, of course, because we've been down now for a while. As you can see, the stock opened here, went public here back in 2020. So it's 4 years old from public. And you can see it's a very, very, very volatile stock. It's a trader's dream. However, traders' dreams very often turn to nightmares because the stock just keeps on trending down over a period of time. So let's take a further look at what the stock is. Let's have a look. SoFi Technologies is a financial services platform which engages in the provision of student loan refinancing options to the private student loan market. It offers home loans, personal loans, credit card. It operates through the following segments: lending, technology platform, and financial services. The lending segment includes personal loans, student loans, home loans, product-related and servicing activities. The technology platform segment focuses on technology products and solutions revenue. The financial services segment includes SoFi Money product, SoFi Invest product, SoFi Credit Card product, and SoFi Relay Personal Finance Management product, and other financial services such as lead generation and content for other financial services institutions. The company was founded in 2011 and is headquartered in San Francisco, California. The listed name is SoFi. Okay, there you go. You can see there 2011, San Francisco. 4,400 employees. Sounds rather a lot for a company like this. You'd think there'd be a bit trimmer on numbers. Anthony J. Noto, we'll be talking about Anthony shortly. Now, this does accompany the Meet the CEO series. Love to have Anthony on the show. If you would like to have Anthony on the show, and if Anthony or anyone from the company is watching, I never email and offer my services. However, we can rank number 1 or 2 for this stock on YouTube, and we can bring your story to the world. I never message you because I don't sell my services. However, those watching right now, if you are an investor in this company and you'd like to get them on the show because you want their story to be told to the world, and perhaps you want them to correct my opinions or update me or inform me or educate me, thereby educating our audience, please do email them at investor relations. You'll find that on their website, and tell them you're an investor, tell them that you're interested in their company and you'd love to see them on the show. Build up a relationship, and then if you want to copy me in, martyn@martynlucas.com, you can. But it's down to you. Build the relationship. I won't get involved until they are talking to you and want to build a relationship with you, and then they might want to speak to me and be on the show. That's how we do it. All right, so let's have a look here. If you're buying it on margin, it's 30%. So it's regarded as fairly safe. 25% is the lowest, 100% is the highest. There you go. 7.92 billion is the market cap. High today, 761. 52-week high, 1170. Low today, 731. And the 52-week low is 615. So there's some volatility there, as you can see. Average volume 44. This is a very highly traded stock, as you can see. It's got high volume, 26 million today. People use it to trade in and out. Is it a good investment or is it a trading stock? They are very, very different. Some are like casinos, and I'm an investor. I like to own the businesses and keep them forever and never sell. That's me. Right, let's scroll down to here to a new feature that we're getting here on Robinhood. So I'm going to share this new feature with you. It's pretty cool. So let's have a look at it as we move down. Trading, trending trades. First of all, Morningstar give this a hold, or a 22% is the buy. Only 17% say sell. But again, Morningstar are paid to give these reviews. I am not. The bulls say the Galileo acquisition was likely a major win, as the major number of accounts using its platform has risen sharply. The bears say, there we go. The bears say many of SoFi's products and services are the result of partnerships or easy to replicate, and that is one of the key points I'll come on to in a minute. Creating the risk of, and we might as well just look at what that is, creating the risk of future competition. Indeed, I'll come on to that in a moment. Right, we've got the Robinhood. This is the platform I'm using right now, and you can see the trends right now. Our customers' sell volume percentage decreased by 10%. So the selling is going down on the last trading day, but you can see in the last few days there's been some selling. People taking their profits as the NASDAQ has been going down, the rotation out of tech into low quality cap stocks. Not a good idea in my opinion, but that's what people do. It presents me, an investor, the opportunity to buy great businesses at a discount. I love doing it. I own the businesses. I never sell them. I just keep adding more and more. So it's always a great opportunity for me. Right. That's what Robinhood are doing. What about hedge funders? Hedge funders, we've just got a recent buy, a steep buy. There you go. There's the money. Retail investors dump, and institutions pick up. There you go. I prefer to be in the institutions camp, even though I'm obviously a retail investor. Hedge fund owners of SoFi increased by 14.2 million shares in Q4. There you go. That is very, very important. And if we look and see who those hedge funders are, we can see massive position moving in there. Buys, ARK Invest, Cathie Wood. Cathie Wood is back. Now, Cathie Wood is great, but she's very good at manipulating the market. Tesla's the greatest thing to buy until she dumps it. Tesla's the worst thing to buy until she buys it. I mean, it's just ridiculous, some of these things. But there you go. But even so, Cathie Wood has just been buying. So you can see the change there, 723%. So she's all in. Institutions buying. What else have we got that's worth mentioning? Entry Point Capital buy, 16,000, only a very small position there. Nothing else major. The major headline there is Cathie Wood. What about insiders? Insiders have been selling. So as it got dumped, Cathie Wood picked it up. Isn't that how this game goes? Insiders have been taking profits, and then it drives it down, and then it gets bought back. That's just the nature of the game. All right, okay. and we can see CTO, uninformative sell. Now, this is important to say this. An automatic sell means it's not sentiment. It's simply could be a tax position or whatever. And you can see the buys underneath there, accumulation of shares via grant or reward. So insiders aren't actually doing anything. That's important, all right? Insiders are either selling. Sorry, these are all buys, I beg your pardon. They're buys due to stock options. That's not, we love the stock, we're putting our own money in it, we're going to remortgage the house and buy stock. And we're getting paid, basically, in shares. That's all that is. And also, we've got automatic sell transactions, very small, but that is just tax position. They don't even know they're doing it. So there's no real negative story there from insiders selling. There is some selling going on, but nothing really major to talk about, which is good, right? That's good. Let's carry on with SoFi. I think I've covered all I need to on this page here. Yeah. Oh, let's go and look at this final part here. Economic moat, none, which means their margins are minimal and there's no room for error. Fair value, $13. I will tell you what the fair value is in a minute, and we're at $7.51. So that suggests it's undervalued. I'll tell you if it's undervalued in a minute. Uncertainty, very high. Yes, and I'll tell you why it's uncertainty is very high. Stewardship, standard. I would have said poor, but I'll explain why I think it's poor. What about the earnings? Okay, so we've got earnings here. Excuse me. As you can see, earnings has been moving up steadily. Very nice indeed. July the 30th is SoFi's earnings. If anyone wants me to cover SoFi earnings, become a member, do a super chat for a minimum of $10 and I will cover it. At the moment, let's have a look. Is July 30th available? It's pre-market. July 30th, pre-market. It is available if somebody wants to book that spot. Once it's gone, it's gone. That's it. I can't do any more reviews. I can do 3. I can actually do 2 a day because our extra channel can do the doubles. But if you want it, do a super chat or a super thanks to this video when it comes out and say you want the SoFi earnings and I will cover it for you. That will be your very own earnings. Right, so if they beat on earnings, that would be very, very nice. Would be cash positive and the business would be improving. Okay, that's the basic introduction to the stock. Let's now move on further in until we get deeper into the numbers as we get towards the end of the video. If you like it so far, please do click like and subscribe and ring the bell. That would be very much appreciated. All right, so first of all, there's no dividend here. This is just a growth stock. Before I give you the news, the numbers, the inside trading, the balance sheet, the profit and loss, let me first of all track back to my original review. So far, until I look at the numbers, I haven't looked at the numbers yet, but at the moment, my opinion stays the same. My opinion is this is not a good investment. This is a trading position. Cathie Wood is not an investor. Cathie Wood is a trader. We've seen it all the time. She'll tell you that Tesla's the greatest thing in the world and dump it. She'll tell you that SoFi is the greatest thing in the world. She'll dump it. She'll tell you that Robinhood's the greatest thing in the world. She'll dump it. She does it all the time. So I don't go on what she says or what she does. And you can see from the very charts, that's how it trades. So number one, it's a trading stock that's trading down. Also, as mentioned in the Morningstar information, and I totally agree, there is nothing proprietary and unique about this. I only buy unique and proprietary businesses. I like Apple because no one else can be Apple. I like Tesla. No one else is Tesla. No one else is Coca-Cola. You get the idea. A business that can be just like for example, Netflix. I would never buy Netflix because anyone can do it. It's not that difficult. I say, of course, it's difficult to actually execute, but with where there's a will, there's a way. You could be a Netflix, right? So, and SoFi is one of those. I prefer Robinhood because even though Robinhood's a brokerage, so is SoFi. They don't do lending the same way as SoFi do, but they do margin, and there's other products coming down the line. I prefer. If you're buying a fintech, I prefer Robinhood, miles ahead of SoFi. The final thing is when you buy a business, You buy a business, not a share price. The share doesn't care. You own it. There's no emotion attached. You are buying a business. And if you can't own a business for more than 5 years, it's got no place in my portfolio. I can't buy it. So when I look at SoFi, I look at the people that run the business. Now, the CEO talks absolute rubbish. I remember it was a couple of years ago when he was the only person saying that interest rates are coming down and inflation and on all these things. It was completely barking mad, wasn't even close to accurate, and nobody in the industry was agreeing with what he was saying. It was absolute nonsense, and as it's been proven out, it was all nonsense. However, people forget very, very quickly what people said. People can say all kinds of rubbish, and people forget, and people have forgotten. But I haven't, because I cover all the earnings, I cover all the reports, and I do the reviews, and I remember everything because it's all recorded. So he has no idea of how the markets work. Now, this is not only a publicly traded company, it's a financial company. So if you've got someone running the company that doesn't understand money, then that ain't very clever. And in my opinion, he hasn't, because he couldn't read the markets. I made a prediction 18 months ago that rates would come down the summer of 2024. Before anyone, before the banks, before anyone. And I was absolutely spot on. You might say, well, hang on, it hasn't come down yet. It's about to. It's imminent. It's definitely going to come down in September. It might come down this month, next week. All right? 100%. Because I understand how the markets work. Maybe he does too, but he wanted to manipulate the stock. The stock clearly is a manipulated stock. It's not an investable stock. It's up and down like a yo-yo. And I'm not saying this to grind an axe with anyone or fall out with anyone. I'm here, though, to provide information, in my opinion, based upon facts, based upon numbers, based upon what people say, for the benefit of my members, period. Not to gain subscribers, not to gain friends, not to gain more people to follow my channel. I couldn't care less. What I do care about is doing the right thing for my members and providing them with information. So no one seems to believe in the company themselves, because no one very rarely owns this stock. They just trade it in and out. So straight away, I would never touch this stock again, no matter what the numbers were, until the CEO was replaced. A bit like Virgin Galactic, rubbish management, potentially a good product, but that's as far as it goes. Right, let me now look at the numbers. We've got SoFi here in green, and we've got the S&P in blue. So if you put $10,000 in 2021 in the S&P, a very, very safe, conservative stock, you've made $5,000. Okay, fair enough. What about SoFi? You've lost half your money. It's gone from 10 grand to 5 grand. Remember, this is a money stock, a finance stock. It makes money out of money, except the shareholders don't make any money. Doesn't make sense. Doesn't make sense, right? Lost half its money. Okay. What about March 2020? We can't go that far back. I will remember, though, it did pop earlier after COVID, because fintechs did. Everybody was buying Tesla. I know it's not a fintech. Everyone was buying Tesla. Everyone was buying Robinhood at the time, getting into GameStop with Robinhood until they didn't. And people had stimulus checks and thought anything sexy and cool or new was great to buy. Well, we saw what happened. Up it went, and straight back down again. COVID plays are the worst. You want to see that a stock can retain its valuation throughout that period. It's never really recovered since then. It just trades in and out, in and out. Even the people that work there just sell it in and out. Right, there is that. Let's look at the this here. Again, I don't like stocks that are politically related. That's why I wouldn't invest in Rumble. It's why I wouldn't invest in DWAC. Anything that is a popularity contest for one side of a political argument. So when it wins, it makes money. When it loses money, right? I want a business that can make money regardless of politics. It always makes business. It always makes money because it's sound, it's reliable, it's managed properly, it's well-funded, it's proprietary, it's unique, and it just simply makes money. SoFi falls on new student loan forgiveness plans. Again, politics has come into this now, and of course, that affects the stock. Can't buy a business that benefits from one political side of the argument. That to me is borderline stupid. It's borderline gambling. SoFi stock slipped Thursday after the government announced it would forgive up to 1.2 billion in additional student loans. Well, of course, SoFi just lose a ton of money because someone in government has made an announcement. That cannot be a good idea, can it? So how can you buy the stock? 1 minute it's great news, next minute it's bad news. No, rubbish. Indeed, the news snapped at SoFi's 7-day winning streak in the stock market. Now, it probably went up because on the rumour that would happen, so people bought it to dump it to take profits, and here we go again. It's a trading, gambling stock. So what exactly does this mean for SoFi? Well, if its stock price movement is any indicator, it may be a bit troublesome for SoFi's bottom line. You're damn right it will be. SoFi could be, we'll come on to the numbers in a minute. SoFi seemingly can't catch a break regarding student loans. They keep having these issues. It's really such a, I don't know why anyone would even set a business up like this. A bank, a regular bank, SoFi is not a full bank. It is partly, but not a full bank. They have many, many more pathways and many more avenues to make money. Whereas if your main thing is student loans, bloody hell, you're relying on students, first of all, to pay those loans back. Of course, if they're government backed, I get it. But if the government changes, situations change, you are vulnerable. I don't think it's a good business model at all. Again, that's why I prefer, even though they do the investment side, that's why I prefer Robinhood. If you Something just crashed into our window. That was a bit weird. I don't know if anybody heard that. I think an asteroid just crashed into our house. Very strange. Very bizarre. Sorry about that. Anyway, carrying on. So yeah, I'd rather own Robinhood. I hope that's where I was. Unfortunately, the Biden administration has repeatedly implemented student loan forgiveness packages. Oh, I hear what it is. That the lawn crew are here throwing around bits and pieces. Anyway, curbing SoFi's once largest revenue stream. Analysts are somewhat divided on SoFi stock. While the company has found other ways to earn aside from student loans, some analysts believe the company will face headwinds related to worsening credit quality of its balance sheet. Exactly, credit quality. Who the hell wants to loan people? I mean, that's the highest risk people. I would rather, not being funny, but if I'm a bank and I'm lending people money, I'd rather lend it to the richest people rather than students. No disrespect to students. We're not. This is not the make friends channel. This is the investment channel, right? This is a business channel, right? And we want to buy a business. Nothing wrong with students. We were all students once, but would you lend money to a student? I wouldn't. No disrespect to students. Don't unsubscribe to me. In fact, you can do what you want. I'm not bothered. But we're here to give information to investors. It's obviously a risky business, and it's also it's also got government risk. Anyway, what's going on with SoFi Technology stock? Another bit of news here. Before I come on to the numbers, let me have a look at this one. Yes, student loans, we've already covered that. We know all about that. Right. Let's now look at the website. Just so you know the business you're buying. This is the business. I don't particularly like the website. I think it's cluttered. I'm not really a fan of it. It doesn't really appeal to anyone specifically. It's not a student-friendly app it just looks a bit silly. If that's just me. I mean, maybe I'm being critical there. Doesn't really matter, but I just don't like the way it looks. But that's just my opinion. That's not important, really. Anyway, let's move on to the numbers, okay? Let's see if we can make some money out of this stock. If you are a trader, I've already said as an investor, I wouldn't buy it because of so many fundamental conditions. Anyway, let's have a look. Here it says, undervalued. So straight away, you'd look at that and go, hang on, this is great. 26% undervalued. Now, it's a growth stock. It is a growth stock. It's undervalued at the moment. It's had a bit of a sell-off recently, of course, on the basis of this news. It's up on the week, but it's dropped off over the last couple of days. So it was, if I just look at it, it was a couple of days ago, 7.95. It's now 7.52. It's saying here that it's undervalued. Base case. Best case, it's undervalued by 57%. Sounds great. Worst case, 7.75. Undervalued by 3%. Now, unfortunately, a lot of retail investors who don't read balance sheets are happy with that. They will look at that and go, great. But we remember, we've seen Fisker, which went bankrupt. It's worth zero, having a $300 valuation. Intrinsic values are okay, but they have to be accompanied by balance sheets, fundamentals, management study, principles, and so on and so forth, and understanding of the market. But some people will just look at that and go, it's undervalued, I'm buying it. Like it will say, of course, on Morningstar, very basic information. Let's buy this. It's on Robinhood. It's cheap. No, it isn't cheap. Let's scroll down and discover why. If we scroll down here and we look at its financials, let's be honest, financials are important if you buy investing. It's up 13%. Very nice. And we've had a steady growth. Very, very good indeed. March 30th, we're now waiting for the next earnings and we'll see where it goes. Up 13%. We've had steady growth. However, interest rates are about to come down. This business is about to lose some of its income. Interest rates will come down. Now, that does also mean delinquent and defaults will get less. If rates are lower, more likely people can pay their bills. There's an upside. Banks make money when rates come down as well as going up because they often get less delinquent accounts. Very, very important to note that, right? We've got non-interest income. Non-interest income. So that has been declining. Most recent report is up slightly, 0.7, but it has been declining. Non-interest income has been declining. So we are soon about to get interest income drop. So if interest income drops, non-interest income is dropping, then you're in trouble. Okay? This should be increasing now, and it's not. It's coming down. I know we've got a slight uptick of 0.7, but that really isn't really that good. Net income is up 36%. Net income is up 36%, but it's still negative. All right? Negative of 218 million. Okay? Gross income and is very different than the net income. Okay? 31 billion in assets. Very nice indeed. 31 billion in assets, of which 23 billion is in loans. Right. Okay, great. So we're lending out 23 billion in loans. That equates to 74%. Their business is all lending money out. They often talk about their brokerage, other things. They make money on this and the other. Nothing of any relevance at all. It's just a lending business. 74% is lending money out. They'll tell you when you speak to them, everything's great, everything's increasing and all the rest of it. Well, only as long as you're getting your debt serviced and we talked about forgiveness and so on. But that's how they make their money. They don't make the money. Everything else is decreasing. They're supposed to be making money on their credit cards. They're supposed to be making money on their investment platform. None of that really makes any real money. The biggest money is the loans. So liabilities, 25 billion. This is the other side of the balance sheet. And we've got long-term debt is nearly 3 billion, 2.9. Now that isn't too bad out of 25 billion. But 2.9 billion is debt. Now, of course, that's going to be improved because long-term debt is 11.5. Okay? That's good when rates come down. But that balance sheet isn't that great. Our liabilities is very close to our assets. And because all our money is being made on loans and loans are being forgiven and rates are coming down and we've seen everything else, this doesn't look good for the future of SoFi. Efficiency, 7%. Very, very low margin. We talked about the moat. There is none. Morningstar, who are paid to say good things. Not technically paid to say good things, but you know what I mean. People would want a good review, right? They're paid to do it. 7% margin. There's no margin. No margin for error. No moat. Slightest reduction, boom, we're in trouble. And, you know, the company doesn't make anything, doesn't build anything, doesn't sell anything. It makes money because you pay them interest. Interest rates going down, delinquent payments. And remember, even though the stock market has been doing well, the economy hasn't. And people are now going to feel for the next year or two the pain of the rates that were up all this time. There's a lagging effect. And people are still going to struggle over the next couple of years. They're not going to suddenly feel rich over the next 2 years, all right? Okay. Now, of course, we have an election coming up. Maybe Donald Trump will turn around and say, we're not forgiving all the loans. And maybe. Who knows? I don't know. You could bet on that if you want. A net margin, down 10%, negative 10%. ROA, a negative 1%. And ROE, negative 4%. What do Wall Street think of this? Well, worst case scenario, 46% downside. Well, that's a bankrupt stock. You can't buy a stock and lose half your money. You've already lost half your money. You lose half your money again. You're down to nothing, right? That's no good. What about on the average? 18%, no point. You can make 10%, 13% on the S&P. What's the point of risking a business that's all about lending money out with the macro condition worsening when you can make that sort of money on the S&P? Well, you could turn around and say, well, what about the best case scenario? What's the best case scenario? Best case scenario, that debts aren't forgiven or whatever. Donald Trump gets in and says the opposite could happen. You want to? I mean, that's gambling. That then is not investing. That's gambling on an election outcome. I never think that's a good idea. I like to own businesses regardless of the election. So I don't like that. So that doesn't interest me. It's great if it's up, but we've just seen how there are more decreasing values, and this could be done a few days ago before this recent round. So anyway, there's that. The competition. Now, if you like this sector, Capital One, Discover, Synchrony Financial, there are other businesses in the sector. If you like fintech, there are alternatives. If you want to know how they perform, and you should compare, because if you're going to buy this, you might say, well, how does Capital One compare? What are their margins? What's their balance sheet looking like? What's their numbers? You click on this, you can all use my software. All my members get access to this. The link is below in the description, Alpha Spread, or on martynlucas.com, my website. Look for all links. Find this, and all my members get access to this for free, or a premium plan where you can do what I'm doing here and basically get a discount so good it makes my membership for free. Okay? We always give you the best deals. Insiders selling. Now, we were talking about it a short while ago. It does look bad. And this is where I'm trying to be impartial. I'm always balanced. If the news is bad, it's bad. I don't care. If it's good, equally, I don't care. I just tell you what it is. But insiders selling, initially, you look at that and go, well, that's rubbish. Everyone's selling. I don't want to buy this. However, we need to be clear. We've just looked at the trades. They are automatic trades, the majority. But nevertheless, it is selling nevertheless. They can always turn those off and not sell their positions, but they are. And to give you some numbers, they bought 1.3 million in the last 3 months and sold 140 million. So it's nothing insignificant, but it's worth noting that they were a lot of auto trades which aren't necessarily sentiment. Okay, now I'm not the only one, and remember, I've never shorted a stock in my life. I've never done options. However, a lot of people are short in this stock. Even now, feel it can go a lot lower, 18.6%. Now then, what would create a short squeeze? A short squeeze would be a minimum of 20%, somewhere between 20 and 100. 20 is excessive. 100 is virtually guaranteed it is guaranteed. It's a short squeeze at 100%. But 18% is getting to the point of a short squeeze, but there's not enough volume in the upward direction. People buying it because there's no real reason to buy it now. there's every reason to sell it. So you're more likely to get more short interest. What would be the good news? Well, a reversal of policy. Will Donald Trump do the opposite? Are interest rates going to stay high? No. Are they going to make any money? Nothing else makes them money from loans. Worsening economy, which there will be, so more people will be delinquent and not pay and default. So it's negative there as well. Let's have a look. 1 week ago, SoFi, Anthony Noto. This guy here talks rubbish. He says things to promote. Remember, and this is important, anyone can set up a company. There's no qualification to setting up a company other than you've got some money and you've followed all the rules. You could be a terrible person. You could be barking mad. You could be absolutely an idiot. Anyone can set up a business. Okay? There's no rule, there's no qualification to being a decent person or telling the truth. A lot of people are very decent people who set up businesses. Some people set up businesses to manipulate the market, like forget his name now, the Mullen CEO, David Mitchery. We get lots of CEOs who set up businesses to just take from investors. We've seen that happen with Virgin Orbit. We're seeing that now happen with Virgin Galactic. Many companies take money out of people. Chamath, people don't trust him anymore. Many people do the wrong thing. They're not necessarily trying to build or create something. They're just trying to make themselves money, and they don't always get away with it. So let's have a little listen. This is quite relevant. Just a few moments. What he had to say, because this is just a few days ago. Here we go.
SoFi, thanks so much for joining us here. Before we talk about your business, I want to talk more big picture about the conversation here in Sun Valley, specifically about the state of the economy, given your purview through your business, as well as the conversations you've been having with other CEOs. What's your sense of the economy right now?
Yeah, I'd say the conversation really kind of pivots around 2 points. One is, where's the consumer, how they...
And there's a very good reason why she asked that question. This man is famous for making this ridiculous prediction about the economy. He made one of the worst. It was like Liz Truss, and the worst prime minister in England ever. He was probably the worst ever, and that's probably why this researcher has opened with that. Give us your view on the economy. Seeing what he has to say.
They performing from a credit standpoint and where interest rates going in the economy. On the interest rate point, we came out of Q1 having reported 26% year-over-year revenue growth with really no growth in our lending business, which is a really strong quarter, and we're really pleased with how things have gone since then. We've came out of that quarter thinking there'd be 1 to 2 rate cuts and positioned our business to do that, which would give us still attractive revenue growth, maintaining profitability, but just as importantly, having a strong balance sheet to take advantage of when rates go down. I think the consensus view is starting to come into picture, and people believe we'll continue to get the data points on inflation, continue to see an uptick in unemployment, but not too bad, and we'll have 1 to 2 rate cuts by the end of the year, which would be really positive.
So he's just said 1 or 2 rate cuts by the end of the year. That is correct. Possibly 3, actually. That's correct. However, he was saying 2, 3, 4 rate cuts about 2 years ago. People forget what he said. I don't forget. I cover all the earnings. I cover all the reports. I don't miss a trick. He hasn't reminded us that he's been saying rate cuts forever. Eventually you're going to get right, okay? The difference is I said 18 months ago rates would come down this summer, not 2 years ago, and keep saying it on every report to try to get you to buy my stock.
As it relates to the consumer, we've seen really good trends in spending. We've seen really strong demand for refinancing personal loans as people are trying to lower their debt so they can make sure they're planning for the future. So overall, our companies performed.
That's not correct. Lower their debt. Debts are actually increasing. More people now in the United States are in debt than there have been for a very long time. So that's the opposite way around.
Really well in this environment. I'm glad we took the stance of lower rate cuts than everyone else because it's positioned us now to benefit when rates start to come down. So I like how we're positioned. And for the first time, I'd say in 2 years, there's a more central consensus view about rates and where credit is. And credit actually has performed relatively well throughout the year. And that's something I heard from a couple CEOs last night. And we're really happy with where it's performed as well, in line with our tolerance levels and our expectations. So all in all, I think we're setting up for a pretty strong back half of the year in 2025 if we get the right fiscal policy.
Well, we're going to talk more about fiscal policy in a minute, but I just want to return to something you said. I know you've been introducing new things.
Like he said, if we get the right fiscal policy, sadly, you have not got the right fiscal policy. So that's not, and obviously he's aware of that.
Such as alternative investments, but also you mentioned you're not doing as many student loans. What is behind that policy, and where are you shifting your focus to effectively follow or lead consumers and where you want to be growing the business?
Sure. As we came into 2024, there was a view that actually rates would be cut 4 or 5 times. And we believed that for rates to be cut that frequently, there would have to be a recession or some type of underlying problem. It turns out we'll get 1 to 2 rate cuts, which is where we've been positioned. And as we thought about the environment and thought about how much we invested in our financial services business,
can I rewind that?
Frequently, there would have to be a recession or some type of underlying problem. It turns out we'll get 1 to 2 rate cuts, which is where we've been positioned. And as we thought about the environment and thought about how much we invested in our financial services business, our SoFi Money product, our SoFi Invest product, our credit card product, as well as our technology platform, we had an opportunity to drive really strong growth there.
I have to correct him there. Getting more rate cuts does not mean we're likely to get a recession at all. That's not an indication of that at all. If the economy has cooled, we can afford to lower rates. The purpose of raising rates was to cool the economy. When the economy starts to cool, inflation comes down, we can afford to bring rates down. We can continue to bring rates down. We're not bringing more rates down necessarily because we're going into recession. It's to avoid recession, but it's not indicative that we are doing that because we're going into a recession. I want to just comment. This is the person who asked me to make this video. You can't compare Mullen to SoFi. I didn't, Robbie Cooper, and I want to be clear. This is Robbie, one of our members, who asked me to do the review. I am not comparing Mullen to SoFi. They are very, very different businesses, very different balance sheets. Mullen is an all-out scam stock. SoFi is potentially a good business. I'm simply saying it's not a good investment right now, and I don't think the CEO is up to it, if I'm honest. So I'm not comparing. What I'm simply saying is that CEOs aren't always the best CEOs, don't always do a good job for their businesses. And if I may say, if he was great and the business was great, we wouldn't be looking at this, would we? You have to judge by performance. You have to have high standards. The standards couldn't be much worse. So the CEO hasn't performed, has he? So we need to be clear on that. And you saying here, rate cuts is out of his hands, though. Correct. Rate cuts are out of his hands. So he needs to build a business that isn't just about student loans. Unfortunately, that hasn't happened. They've tried and it hasn't happened. People aren't taking up the other services enough that they would like. They'll tell you they are, but obviously they're not. I've just shown you the numbers. And we all thought it was going down a couple of years ago. No, we didn't. No, we didn't. I didn't say rates were coming down 2 years ago, and nobody was. The banks were not saying that. The Fed was not saying that. I don't know who was saying that, but nobody was saying 2 years ago that rates are going to be coming down. Absolutely not. And you can check all my videos and see I most certainly was not saying that. So let's be absolutely clear. Let's be absolutely clear there. Let's hear a little bit more.
At 50%, and really pull back in the lending business to be more conservative, to wait to see where the economy shakes out, where interest rates shake out. And now we're coming into a picture where that's a lot clearer. So we've delivered really strong growth without really using the lending business to help drive it. And now we're in a position where, as we go into 2025, to use both.
No, that's not true. We've just seen the balance sheet. The majority of the money has been made during lending, not the other services. We can see the balance sheet. We're looking at the numbers. A lot of retail investors will not look at balance sheets. They will just think this is a really cool thing. They use it, so they invest in it. That is not the case. You are not building a business outside of lending. I think the lending was it 74% of their income? So that is not true.
Of course, your business all started with student loans. And then just last week, a federal appeals court allowed a key part of Biden's student loan repayment plan to resume, staying in an order that had temporarily blocked it. Now, there's been a lot of back and forth on this. But how does Biden's efforts to repay student loans impact your business? And how do you see some of these legal changes and sort of the whole appeals process and the outcomes impacting your business going forward?
Yeah, we've really focused on people that have private student loans. Those are people that are still managing their cost and giving them cost savings on refinancing their private student loans, and that's been a smart strategy. It's a much smaller percent of our business. We gave guidance that we'll do close to $2.5 billion of revenue this year. We'll see really strong growth from the other businesses, so we're much less dependent on it. The fact that we grew 26% year over year in Q1 with no growth in lending overall is a great indication that we've invested in other areas that are really paying off for us. And the response that we're seeing for consumers in our SoFi Money product with 4.6% interest rate, SoFi Invest product, as you mentioned, offering them alternative assets, and now IPO.
Whoa. 4.6% interest rate. Robinhood offer 5.25. In fact, you can get 4.65 at the Bank of America. Banks offer rubbish rates compared to online, so they're way behind. They're way behind the competition there. Robinhood is 5.25, so we shouldn't be celebrating that fact.
We've seen a great response there, and it's allowed us to go after other growth areas and not be so vulnerable to the whims of where the political or winds are blowing as it relates to student loans. I will say this: we've done well with a high rate environment and uncertainty around credit. I'm really excited about what will happen when rates start to come down, and you can start to see the light at the end of the tunnel. When rates come down, we'll see a real pickup in student loan refinancing. Right now, there are people with rates at 7 to 8% student loans, but we only can offer them in the 6s. As rates come down, we can start to offer them in the low 5s and maybe in high 4s, so that business will pick up. Our home loan business had historically been a refinancing business. We've invested a lot in being able to do purchase home loans, and we're now seeing that pick up and gaining market share there. And we've recently made the decision on home equity lines to give people even lower cost of debt. So as rates come down, we'll see a real pickup, and as long as the economy is stable and inflation is stable.
So you've mentioned various ways that your business is growing, but your stock is way down. Stock is down about 35% year to date, down about 19% since your last earnings report. I know that you have earnings coming up in a few weeks, so you're limited in terms of how many specifics you can share. But what's your message to investors? Why should they hold on when the stock is down so dramatically?
Yeah. The thing that we can control is our strategy and our execution. And for the last 7.5 years, our strategy has been consistent and our execution has been consistent. We've driven good, steady growth. When I joined the company, we had less than $300 million of revenue in 2018. Now we're over $2 billion of revenue. We weren't generating profits. We weren't generating positive EBITDA. Now we're generating both positive EBITDA and GAAP profitability. So I'm really pleased with what we're doing. In terms of the stock, I'm equally disappointed. I'm a big investor. Our employees are large investors. What we've seen and what we believe is happening is that the group of fintech companies that have credit exposure has been really hit hard. And they've been hit hard because of the uncertainty around interest rates. When will interest rates peak? And when will credit peak? And as I mentioned, we're really pleased with where credit's performed. We expected it to pick up a little bit, but it's within our tolerance levels. So good sign there. And as I mentioned, 1 to 2 rate cuts would be welcomed and moving in the right direction.
And what about
rate cuts is not going to benefit them enough. And he's keep referring back to these rate cuts. And I understand he can't control that. That's why he said 2 years ago, rates are going to come down. He made wild predictions because he feels if he says it enough times and enough people buy the stock, he can make money out of it. And you can see how it trades. I don't see insiders holding on to their stock as much as they should. It gets traded enough. I don't think there's real belief in this. There's opportunity to tell everybody it's going to be great, so they'll buy in because it's a very young person stock. They won't read balance sheets. They won't look at the numbers. They'll buy this position and it'll get traded out. I'm not buying any of this.
AI. Will SoFi be the one to bring AI to retail banking, and will that really accelerate your results?
Yeah, there's a whole spectrum of technologies that we use every day to ensure that our product is safe, it's reliable, and we can be a trusted partner. Where we want to use AI is to fortify those areas, but we also want to use it to answer 3 questions every day. Because this is a financial show and we operate in a financial world, people want to talk about interest rates and consumer spending. We don't spend a ton of time talking about the product, but we are a product company, and my vision for the product is that you open up SoFi every day and you go to your member home feed just like you would to your Twitter home feed or your Facebook home feed or LinkedIn home feed, but we answer 3 questions for you in a personalized way. What must you do in your financial life that day? What should you do and what can you do? AI allows us to take all the data about you and everyone else and answer those 3 questions.
Just a final question about politics, because I know the conversation about the presidential election is front and center here in Sun Valley. What outcome do you think would be best for the economy and for your business in particular?
Well, you know, I'll make an analogy. I went to West Point and I played football, and I want Navy to win 364 days of the year. But on that one day when they play Army, I want Army to win. And so I'd be lying to you and being, less than disingenuous if I didn't say our business would benefit from a Republican administration. There's more capital markets activity. There's more M&A activity. I want our country to be very strong and vibrant. And on one particular day, I'll be rooting for one particular party. Okay, very, very good indeed. It's good to hear what he had to say. Let's look at, and he's right there, of course, tech, fintech, money, finance, all benefits, all prefers a Republican government. There's no question about that. He's right there. Right, let's look at the last 90 days. 62% sentiment, good. Last 30 days, that's decreased to 60%. Last 7 days, 66%. And today, no news. So sentiment is looking good. What else can we report on? I think that's pretty much it. You might like to look, I don't know if I have my my reviews here. I did a review for this, load more. It's been a long time, actually, since I did it. Let me see. No, it goes back too far. It was a long time ago. SoFi, I can't even see it now. I did a review. You could have gone and checked this out, but you could compare what I said then to what I say now. Let me just scroll up. Maybe I missed it. Didn't think it was that long ago. Maybe, oh, yeah, it's certainly more than 2 months. All right, okay. Anyway, there is my thoughts on SoFi. This was requested by Robbie Cooper. Oh, I'm just going to answer this. Someone has just come in here. Let me have a look at it. Robbie Cooper says, hang on, let me start here. Martyn Lucas, the SoFi CEO seems to be lying his way through the interview. Maybe he should run for president. I'm not commenting on that, of course. But yeah, you could tell that. That was a very uncomfortable interview. I didn't buy heart. Well, you know what I said because I reacted to it. But it's interesting that you picked up on that as well. I appreciate you covering this, Martyn. I'm for healthy debate. Absolutely right. Debate, discussion, and numbers and facts is what it's all about. Whether you agree or not is entirely up to you. I agree. There is so much more to their business than lending. Lending is a small part of it. It's not. You cannot say that, Robbie Cooper, when I've just shown you the balance sheet. I've just shown you the numbers, right? So we can sit here all day and debate how great the app is, the website, whether you like it, whether you don't. That's fine. And you like lots of things. However, you can see 74% of their income is done through loans. That is not made up. That is a balance sheet. And we know, because we have done research, and we know most retail investors, they've told me, and we had an 86% vote, do not read balance sheets. They go off trends on Twitter, trends on Reddit, and that intrinsic valuation. It's quick, it's easy. My mate said down in the pub I should buy it. It looks really cool. And I'm not saying there's anything wrong with that. You might get it right now and again. However, the reality is, their business right now is loans. Simple facts. I don't care whether anyone buys it, likes it. It doesn't bother me, but I'm doing a review for you because you've asked me to, so I'm telling you the truth. You don't have to agree, and that's fine, but that is the facts. Grippy, you are missing the technology side. Alpha spread ain't accurate. Yes, it is. Galileo is going to be huge. Robinhood is just one example who use them. Correct. They are now profitable and institutional ownership is increasing. Yes, I've said that. I pointed out the institutional investments. I've said that. Don't disagree with you. But you are missing the technology side. It doesn't matter about your opinion on the technology. What matters is, can they make money from it? Can you make money as an investor? That is what's important.
I am trying to share information for you to make a judgment as an investor. Not, hey, the technology is cool and they've got AI and they've got dancing robots. I don't care. Does it make money for me as an investor? My job is to provide you with a review which gives you an accurate review, not to just rattle the rock and roll tin or whatever, or bang the drum. And as far as alpha spread's concerned, not only is it accurate, I've also provided information from the portfolio backtest software. I've also provided information from their own website. I've also provided information from their earnings and their filings with the news and so on and so forth with the government information. So it's been a balanced approach. Plus, I've shown you the insiders. I've shown you the trends and so on. I've also let you hear the interview from himself, the CEO himself. Here we go. Here's one of our big investors. The CEO of SoFi is a liar. He was predicting rate cuts in 2022. There we go. Stephen Lewandowski was with me at the time when he was making wild predictions like that. He was the only person in the space making predictions like that. He was doing it to promote the stock. Please do what you like. Buy the stock, dump the stock, short the stock. I don't care. But know that the CEO isn't accurate. And I invite the CEO onto my show to answer me and have a debate with me and tell me I'm wrong. I am more than happy, and I will play him the videos of him saying such things over and over again. And he's still saying it. He simply follows the trend and just keeps saying what he thinks is going to benefit his stock through Reddit and all of those places. CEO, as described by Stephen Lewandowski, is a liar. He was predicting rate cuts in 2022. Nobody else was doing that. There we go. Ha ha, he was right 2 years early. Absolutely. One final comment. Martyn Lucas. That's about a different video. Okay. So there we go. There is my thoughts on SoFi. Pay your money, take your choice. It's entirely up to you. It's not a stock that I would buy. I can't give it a buy because I invest in businesses. Businesses are the people that run the businesses. Sadly, the CEO either is manipulating the stock, doesn't know what he's talking about, or a bit of both. Either way, that doesn't work for me. And if I was wrong, the stock wouldn't be on its arse. And it is. Click above my head, down below in the description for all the links. Over here, you'll find the full list. Until next time, as always, take care of yourselves and each other.